There have been mixed reactions by analysts as to why the central bank decided to raise it by that much. Wale Oluwo from BGL is here to give us his own perspective on the recent rate hike. Borden, thank you for being here. Now, of course, before... Good to be here again. Before and after the CBN meets to decide on interest rates, there are always divergent forecasts or analyst predictions as to what direction or what stance the CBN would take. And from what's after the meeting, it didn't seem like analysts were expecting as much as a 50 basis point hike in the MPR. What were your own thoughts? What were you thinking? What were your expectations?
Really, I was here on Friday, and I was very clear that the central bank will increase interest rates. There was no doubt about that. But I wasn't expecting a 50 basis point. I think it's a little steep. I would have expected that, maybe like 20, 25 would have helped. But if you look at the background to what informed the CBN's decision, you will understand that it is substantially anticipatory because they are expecting a lot of cash inflow into the system, from adjustments in the minimum wage, the regulation of the oil and gas sector and the rest of them. AMCON and the rest of them. It was in the papers about 2 days ago. AMCON will put 800 billion, close to $1 trillion.
That's a lot of money.
A lot of money to the banks, and this is going to hit the system. So clearly, if you look at everything they are expecting, we have to be sympathetic to them and say maybe it's the right thing to do at this time, but it must not be sustained for too long.
They have one more meeting this year in November.
They have one more meeting this year, and what they should be able to determine is what the effects have been within that 90 days. Sometimes when you expect that cash should be injected into the system, two things could arise. It could either be inflationary, and it may not be as inflationary as you would have expected. And where it will not be inflationary is where the economy has excess capacity, and those cash can stimulate production of goods and services, and you begin to see the numbers in the macro economic variables. That has to be tested. But let me go to another issue that the CBN raised in the MPC meeting, and that is the issue of output and prices. You will realize that the growth of 7.72% that was achieved was substantially...
That's GDP growth?
GDP growth, okay. Yes. Was substantially contributed by the agric sector. Ironically, at 2.48%, and then retail and wholesale trading accounted for about 1.88%, and then you have services accounting for 2.52%. Now, these three sectors, I will say yes, I'm very impressed with agric, despite the fact that,
No, but after oil, the agriculture sector is usually the second biggest contributor.
No, the truth of the matter is, there are three variables here. You have the gross domestic product.
Okay.
You have the gross national product, and then you have the foreign exchange earnings. In terms of foreign exchange earnings, it is the oil and gas sector that contributes almost like 80-90% of our foreign exchange earnings. But in terms of gross domestic product, that is the totality of goods and services produced in the economy for a particular period. Agriculture has been the major contributor. Not only that, even in terms of employment, you'll be shocked that agric is the highest employer of labor in the economy. Now, for agric to have grown at 2.48%, it means we would have had a very good harvest here, which I think is positive. You also understand that agric is not getting a lot of finances from the financial sector, and is still struggling to be the number one supporter of the growth. So I think that is key. But what is missing here, which I think is also very important, is the fact that the manufacturing sector is not featuring at all in the contribution to this growth. And that has serious implications for employment, because it is agric and manufacturing sector that should drive growth and employment.
Okay, did the central bank say that the growth we've recorded so far, that it's satisfied with the growth so far? I know you said the manufacturing is not playing...
it's not playing a major role. They want to look at those...
But we're still having a GDP growth of 7.7%.
Yeah, but if manufacturing was contributing, maybe we would have achieved like 8-point-something or 9%, or even 10, if possible. But what is important is that in terms of significant growth drivers, agric has done very well, and then services have done very well. But in terms of trade, maybe 1.8 is not so bad, but
okay, now
manufacturing is not featuring.
In terms of cost of borrowing, it's obvious that this would definitely increase the cost of funds, of borrowing funds. If the central bank has increased the rate at which it lends to banks, banks in turn will, of course, push that down to their customers.
That's correct. And I think the CBN, in fairness to them, they noted it, that this measure is a short-term measure, because they know as it continues to increase interest rates, you make the overall lending rates in the economy to go. I think it averages about 22% now. It's not very healthy for the manufacturing sector that we say is not contributing now.
Yes, because if I want to go, an average person, a customer wants to go get a loan at 22%, that's still high.
It's very high. CBN has noted it, that this increase, this very steep increase in the interest rate is something that was a painful decision for them to take, considering the anticipated injection of a lot of cash into the system.
Sorry, coming here. When you say the central bank says it's temporary, does it mean it to bring rates back at some point, or that it just won't go further anymore? No, not necessarily. You have to monitor the variables. What macroeconomic is about is balancing, and you want to put this in perspective, and you want to determine what your objective will be at a particular point in time. And pursuing that objective, a lot of other variables will suffer for it, and that is what the CBN has done. The CBN has made a determination that the major issue they have now is inflation. Inflation, and it also mentioned, apart from inflation, it also said supporting the naira also.
Supporting the exchange rate. That has been there for the past 2 years. And
so it's not a major thing, right? It's just inflation now.
It's still a very major one, because they believe by supporting the naira, it will help them moderate inflation. Okay. I don't necessarily agree with that policy, really. But having said that, it doesn't matter. What matters now is we are looking at the growth drivers, and then we are looking at this inflation thing too. Inflation at 9-point-something% and still struggling. 9.3% and still struggling to bring it down. I don't think it's a right strategy to approach at this time.
So you're saying that where we are at this time, our economy is not. Are you saying that the economy is not ready for this kind of tightening, for this kind of rate hike?
Not that the economy is not ready, Esther. I think I must make this very clear. You see, in economics, there's a difference between growth and development. Now, you find a situation where you might be growing and not developing. The problem with the economy is not so much of all this inflation and interest rates and the rest of that. Those ones are the effects. There are some things causing them, and those things causing them are the structural deficiencies in the economy. The economy is structurally defective. The economy, the way it is structured today, cannot drive growth and use a lot of our inputs that we have today by way of raw materials. The economy is not structured to achieve that.
When you say it doesn't drive growth, some might argue that second quarter growth, GDP growth of 7.7%, because I remember the statistician general did say that we beat 3 other nations, Brazil and 2 other nations, in GDP growth. Some might argue that we're not doing too badly at 7.7%.
The truth of the matter is we are not doing too badly. But I said earlier, growth is not the same as development. Now, look at it this way. The central bank gave a lot of data on other variables that relate to the economy, growth, inflation, price stability, growth of credit and external sector, and the rest of that. But what we didn't see in the MPC communique is capacity utilization. In the industrial sector, what has been the effect of all this increase in liquidity, expansionary policies that we say we've been operating for the past 1 year or 2 years? What has been the effect on capacity utilization in the manufacturing sector? Is when you can relate that you can say, okay, all this money I'm putting into the economy, we can see the effect in agric. At least agric is doing well. Not very well, but relatively well. If we can also be bringing the capacity utilization data into the MPC consideration, then we begin to see whether whatever increase we are seeing in the lending, in the amount of money that the banks are putting out by way of loans, if really it is getting into the manufacturing sector. Because if it is not, then we can assume or conclude that it is going directly into trading, and each time you trade, you are just depleting your foreign exchange reserve. Okay. That is the issue for me. I still look forward to seeing the MPC bring that data into their communique, so that each time they talk about agri, talk about services, we want to know what is happening to the manufacturing sector. It's very key.